All right, today we will be closing a trade, one of our stock options trades that is not with the June expiry date that you might have guessed. We are closing our trade with the October expiry date, and it is Starbucks call option. If you'll recall, let me open that email to show you what we did. We bought a call option for 288 bucks. We were doing the October auction with a strike price of 50. So we're going to sell that to close today. I'm going to show you how to put that in the options trade. But first, let's review the trade. Here's what happened. On May the 5th, we saw the area gap close. We saw it close before that. But on May the 5th, we opened a position thinking that the stock was oversold at this low point and would continue its upward trend, which it did. You could still hold on to this stock if you wanted to. I saw it even out around here. There was a resistance. It broke that level of resistance and it's likely to climb even higher. But we're not managing our theta, so we're exposing ourselves to time decay with this option. And as it gets closer to October, we are paying more money per day to hold on to this option. So I'm going to say to get out and take a profit now. I usually don't do this, but in this case, I'm going to say to do so because we're taking quite a nice profit if we get out now. I hate when Yahoo does this. But you have another choice. You actually have two good other choices. One thing you can do, if you don't want to get out now and you want to keep riding, you can manage your theta by selling the weekly call options that are above this. So you might want to sell the weekly for 53 or 54. You could alternatively change this into a debit spread where you sell a higher one, maybe at 60 for October, and hold on to that. That way you gain some profit from the time decay of the 60 call. I'm not going to show you how to do either of those today. I'm just going to tell you go ahead and close this position for a newsletter. But your final option, your final choice in playing Starbucks for a longer period of time is simply to exercise the option and convert it to stock. If you've got the money to do that, then you could just exercise it and then pay. What are you going to be paying here? You're going to be paying $5,000 per option to grab the stock. That's another choice you have. But for the sake of the newsletter, I'm closing this trade now. Here's what we paid. We paid $288 to get in, and actually you probably paid less than that to get in because the stock dropped when we opened it. So you probably paid less than $288. I'm just going to count it as $288 anyway. Here's how you close it. You put in the symbol. You sell, close. You put in the number of contracts you bought. I hope you bought more than one. It's a call. Expiration is October. The strike price is 50. The price type, we will always want to sell at a limit and choose the limit between the bid and the ask. It's not an even number here, so I'm just going to say we're going to close it at 3.98. So what happened here? We bought an option for 288. We got 110 bucks profit off of investment of 288. So that is an ROI of 38% on this trade. So if you put in 100 bucks, you got 138 bucks back. If you put in 1,000 bucks, you got $1,381 back. That's quite a good ROI for such a short-term trade. If you have any questions about this trade, please email me. And again, if you want to hold on to Starbucks, you could either exercise the option or you can convert it to a debit spread, either a weekly debit spread or a monthly debit spread that matches the same expiration date. Thank you.